So welcome to our weekly hints, tips and advice videos. Today I'm delighted to be joined by Dave Jackson of Lincolnshire Financial Services. So Dave, thanks for joining me today. We are going to talk a bit about giving people the basic information and top 5 tips on how to apply for a mortgage. Yeah. But before we start that, we've both had experiences on the same day, funnily enough, from out-of-town mortgage advisors that had been giving people not particularly great advice. And
telephone-based.
Yeah, telephone and internet-based.
Large offices.
Yeah. Mm. So I thought we'd go with a bit of how local is better.
It just is. I think on the day that it happened, like you said, you had a client that it happened to, somebody buying a property, and I had somebody where it was a tag on Facebook, and the client had been told that they could easily afford a mortgage. I actually, when I spoke to the client, turned around and said that they couldn't, giving them that advice. And luckily as well, another advisor on Facebook as well had been approached, and she'd given the same advice. Yeah. So it just showed that I think local was, was the best way, if you like.
I think it's someone you know and you can trust and get that recommendation from someone else locally. I think that's the biggie, isn't it?
Yeah, if somebody's used them locally, we're not just talking about us, we're talking about others locally. Speak to them face to face. It's always best to have that face to face contact. Definitely, certainly if you're buying a first home, it's needed.
Yeah, absolutely. You want to go in eyes open, knowing exactly what's going to happen. I mean, that's part of the reason why we're doing these videos as well, isn't it? To give people advice that are unfamiliar with the process, so they can move forward in a way that's going to be stress free.
Yeah,
perfect. The first tip that we're going to go with is to check your credit score.
Yeah. Personally, I recommend Check My File to my clients. I think everybody probably refers others as well, whether it's Equifax or Experian. The good thing with Check My File is that Experian and Equifax are both on there, along with a third one called TransUnion. So that just gives the advisor complete transparency about what's going on across the credit file. And I think the one thing to remember as well is that one credit reference agency doesn't always talk to the other, and generally they'll talk to each other at the end of the month, but there is sometimes an overlap, so some things can be forgotten or missed.
Tip number 2, now where are we? How to stabilise your income.
So I would suggest not leaving work on a Friday and starting a new job on the Monday. It does happen. Certainly, obviously at the moment with things like furlough as well, we're coming across that a little bit more. I would say the market is changing slightly now as well, in that lenders are probably taking a little bit more of a sense check in terms of furlough and new jobs, and realising that people are moving. Certainly if they've been sat at home for 12 months and then realised they want to start a new career. I would say, if you can be in the role for a month, and that's the ideal. Most lenders will always want a first month's salary mandated, along with a pay slip. So that's what the kind of standard would be. Proof of contract and sometimes offer letter. So again, depending on who the lender is.
Perfect. So the third one is important, I guess. It won't apply to everyone, but it's being able to pay off existing debts.
Again, an individual basis really. I suppose it's whether or not you've got, and it does fall down in whether or not how much you've got debt. Lenders, or some lenders, will look at affordability with debts that are being paid off in the future. So sometimes if there's only 2 or 3 months left on a certain debt, they will ignore it, which obviously can help from an affordability point of view. If there's considerable debt, then it could be difficult for that individual to then obviously afford the mortgage. But that's where the advisor comes in to obviously assess it all, do the initial fact find and see where it fits. And it might be that the client has to go away, wait for a little while some debts are cleared, or maybe approach a family member to see if those debts can be paid off in another way, and see whether there's a gift that side.
Okay. Tip number 4 is knowing your affordability.
It's probably more important for us to know the affordability as well.
But it is for you.
You have to take a bit of a sense check. So I think somebody who is certainly sometimes with first-time buyers, you might find obviously if both parties are at home with family, you've obviously got council tax when you move in, you've got food bills and so on and so forth. It's a bit of a shock to the system.
It is a big deal, isn't it? If you've not lived together before, and you've not lived in a household, you've just been at your mum and dad's, and again we're going to touch on that next week for first time buyers, to move into somewhere and then have all these bills, it's massive.
All at once. Yeah, exactly. Yeah, all on the first of the month generally.
Yeah.
But yeah, it is a big shock. And so again, the fact find that we do actually goes through what your future costs look like as well. So obviously that is from an advisory point of view. It gives us a good idea of whether or not the future mortgage is affordable.
Yeah.
And that's where we give the advice. So
perfect. The 5th and final tip is about deposits. You know, how people can raise a deposit.
Yeah, so numerous ways, obviously, from just standard savings, could be premium bonds, could be anything really that they've kind of saved up in. Help to Buy ISA, obviously, at the moment, people are still using. But there is gifted deposit that we do, where obviously it can be as far down a family member as an uncle. From some lenders will accept that. So yeah, don't forget that can obviously be a possibility. There's also as well gifted equity cases that we do quite a lot of, where somebody's buying maybe a grandparent's home, and grandparent is actually looking to gift some of the equity out of that property as the deposit to the client.
Yeah.
In which case, sometimes the lenders actually will take all that equity as the deposit. The clients actually don't need to put anything in.
Oh, right.
So again, that can be a good way if somebody's looking to sell a property. Yeah.
Yeah, I wasn't aware of that one.
Yeah.
So those are the 5 top tips that we're going for. But I guess from the end of this first video, the main thing we want to get across to people is if they are new to it, they want some advice, they really should have a look at someone local. Yeah,
I think 100%. You really utilise Facebook, the reviews, obviously on Facebook and so on, and ask people that have used an advisor already locally and take it from there.
Well, that brings us to the end of this week's video. But next time you're in, Dave, we're going to be talking about how first-time buyers can, what they can be doing now to help themselves in the future for when they apply for a mortgage.
Yeah.
So we'll be looking at different ways of making deposits, and we'll also be looking at the credit agencies and what's involved in that and how to get your credit score up. So we'll be doing that in a bit more detail.
Okay.
So thank you very much for your time.
No problem. Thanks
Cheers,
very
Dave.
much.
Thank you.